Oh, let's get you updated on our ag commodity trade here today. I'm Marlon Bowling with you, and let's start by looking at what's going on in the corn. Our quotes from bar chart show that September contract on the corn is now trading 8 1/4 higher. We're at 493 1/2. It's hanging right in there with solid gains. December corn now 7 higher at $5.50. That one hasn't moved too much. On the other hand, you look at soybeans, and they've been all over the place. Now, August soybeans now quoted at 14.55 1/4. That would be down 13.5 cents overnight. They were quite a few cents higher, actually. Had a high of 14.79, and we're off of that now by about 24 cents. We have November soybeans now 15 3/4 lower at 13.39 1/4. That's only 4 cents from our low of the day. Now, in Chicago wheat, it's been under quite a bit of pressure today. September dropping 16.5 cents. We're at 657 3/4 after a high of 674 in the early morning hours. And then if you look at the Kansas City market, you have September down 3 at 843 1/4. And it had a low of 831 1/4. So we're 12 cents off of that. But we're also 12 cents off of our earlier high from last night. So we're kind of stuck in the middle here on the KC wheat. In Minneapolis, the September contract is down 2 1/4 at 855 1/4. On the cotton market, we have the December cotton now quoted 45 points lower, back under 80 cents at 79.78 cents per pound. And I know I looked at this earlier, just, well, for kicks and giggles, as they say, but on the oats, we have the September contract still 16.5 higher after going limit up yesterday. It was up 25 cents. It's now at 429 1/4 per bushel. That is a strong performer here this week. So that means we have added about 41.5 cents in just the last 48 hours, I guess, or 24 hours. So let's go to Ted Seifried of Zaner Ag Hedge in Chicago and chat about what we're witnessing here today. It's a short trading week. Ted, they're combining a lot of market action into just a few days, but I don't know if you can make much sense out of what's going on. Market's going everywhere.
Yeah, Marlon, absolutely. We had a really thinly traded day on Monday with, the bookend of the, weekend and then the holiday on Tuesday. Mm-hmm. And yesterday, it felt like a fairly thin, choppy trade. It still kind of feels that way a little bit, but maybe better today. And what you're seeing mostly is really just technical corrections kind of across the board. They're correcting the corn and bean spread just a little bit. They're correcting wheat and soybeans from the strength that they've had. They're correcting corn a little bit after the massive amount of weakness that we've seen over the past 10 trade sessions or so. So really, I mean, we're kind of looking for direction right now. We're still letting the dust settle from that shocking acreage report that we saw last Friday. Then all the weather that we saw over the holiday weekend, and then the crop conditions that we saw Monday afternoon. So all of these things are still being digested by the market. And I got to say, market feels very indecisive at the moment. I don't think we really have answers to the questions that were left from all of the things that have happened in the last week. And time is going to tell. So, yeah, it's going to be interesting going forward. This is going to be a very interesting end of the growing season because we have two very different sets of fundamentals for corn versus soybeans versus wheat. And how that all plays well together or plays together is going to be very interesting to see because you can have some very funky things happen between now and the end of the growing season. If there's any reason to believe that soybean yield is coming under pressure, dropping below that 52 or maybe significantly below that 52, you're going to have a fairly wildly bullish soybean balance sheet. You're going to have need to price ration. But on the other end, with corn, we have a massive cushion now with the extra acreage for further yield declines. So you've got corn in a position where it needs to go buy demand and soybeans potentially in the position where it needs to go price ration demand, or at the very least can't go out and tempt demand right now. So again, this is going to be very interesting to see how this plays out for the next couple of months. And again, I really don't think the market has any very good answers for that just quite yet.
And there is so much volatility in the markets. And not just in the ag grains sector, but there are other commodities too. For example, crude oil, the West Texas Intermediate crude oil trade has been jumping around quite a bit here this week. Had some big gains yesterday. Now August, the crude oil is now down $1.18 at $70.61 per barrel. Had been as high as $72.34, and now it reversed off of that one again. So on it goes. We'll come back in a moment. We'll take a look at livestock trade with help from Ted Seifried. As I mentioned, let's take a look at our livestock trade on the live cattle board right now. A lot of negative signs here today. You know, it had come back last half hour from its earlier lows, and now it's probing the depths again. We have the August live cattle at 173.77. Now we're back within 20 cents of our low of the day, and that means we're down $1.17 from our close yesterday. And remember, we had a weaker close yesterday. October down 125, and now we're at 176.62, within 10 cents of our low of the day. And right now, we're getting close to about $1 off of our earlier high of the day. Well, on the feeder cattle market, we had the sharp losses yesterday, and we have more sharp losses today. Feeder cattle, after they had that big reversal down yesterday, they gapped lower today. And the August contract now down $3.30 at $241.40. September down $3.40 at $244.75. That is a crazy, huge reversal of what did we shave off of that, about $6.50, $7 in just the last 24 hours on feeder cattle. I mean, look at below. That is a dangerous market to be playing in. In lean hogs, you currently have the August contract up $2.37 at $99.82. It broke $100 earlier this morning, got up to $100.75 before selling off a little bit. October up $3.20. It's at $83.75. Lots going on here, Ted. Give me about a minute capsule, if you could, of what's going on in the livestock trade, especially watching those feeders. Wow.
Yes, that's the thing. The feeders are the leaders here today, and that's not a good thing to say after the amount of pressure that we've seen in the last two trade sessions. A lot of that has to do with corn maybe trying to find a little bit of a near-term bottom and bouncing up. But also, we're kind of getting that time frame where you start to see the grilling demand and things like that slow down a little bit as we get into the summer doldrum days. It picks up back again as we get into Labor Day. And the idea is that maybe cash cattle has gotten a little bit too high. Maybe box beef prices have some room to cool off. And in the meantime, that's coming at sort of the benefit of pork. I mean, look at the hogs. That August hog contract really rallying. We've got low weights, which means marketings are super current. There's not a whole lot of animals up front that are ready to go to market. So that's why you've got a whole lot of strength up front in the hogs rather than the deferred contracts. But what a bounce has been off of lows. Cutout values are still really rather strong. I think there's a bit of a demand shift from beef to pork based on the high prices and the substitute, a little bit of cheaper priced pork. So it's been a very interesting to watch the spreads that are happening in the livestock world.
Exactly. Yeah, it's starting to be a growing consensus from what I hear about a big shift taking place out there. Well, thank you, Ted, for all the information. Covered a lot of ground. I appreciate that. Ted Seifried of Zaner Ag Hedge with us. He is located in Chicago. So, Tammy, the beat goes on.